Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Hey, everybody. So I just wanted to give an update on my positioning on Google. I've been talking about this in the community for a long time. The earnings came out. I've been worried about it for a while. I think they're really, really getting disrupted in their search business. And their search business is almost 60% of their revenue, and it happens to be one of the highest margin businesses that they have. So I think while they have some other great assets we'll talk about in a moment, I think they're really, really under pressure right now. It's the mag that is the cheapest from a multiple standpoint in many ways, but it is just in trouble. And as I always talk about, the stock market performs at the margin. The current narrative right now, right here, right now, is not good. And we saw some news out this morning. Apple explores AI search in its browser. So slowly you could see platforms move away from using Chrome, using Google in some ways as the writing's on the wall. I've been talking about this. I sold Google the morning of the earnings up around 167. And then on April 30th, I said I added the SEP 145, 120 long put spread for $5, added on rallies. Going to say I'm adding on rallies. And I said, look, it kills me to get negative on Google, but we'll see how it unfolds. I'm just not happy with what's going on out there, because in a world of disruption, which I've talked about over the months, said this new digital age and AI is just throwing everything into question. Companies with big moats and profits associated with those moats are now under threat in ways that you couldn't have imagined. You thought these guys are going to have these massive moats with all the data in the world for 100 years to come. And here we are, people are using ChatGPT, Grok, all these different things, Copilot, whatever, take your pick. They are using it more and more to get things done. They don't have to deal with ads. This is a very, very big problem for Google. Now, do they have some other things here? Yes. Well, on top of that, they're going to break up Google. Now, that might be a positive, right? Because the parts may be worth more than the sort of aggregate total of the company. I'd say break it up quick and get rid of, kind of separate them out. YouTube, one of my favorite assets in the entire world. So they have an incredible asset in YouTube. We'll talk about growth potential there. They've got Waymo, Google Cloud, of course, a very big player in cloud. I think that continues to do very well in this hugely expansionary digitization of the world and AI. They've got Google Play and Android. They've got a few things. These aren't really very profitable yet, but Gemini, Vertex AI, and then of course that quantum chip that everybody got excited about around $200. They've got that one as well. So there are certainly lots of sort of moonshots and other sides of the business that we can kind of look at. But in terms of look at their revenue, YouTube ads, 36 billion, terrific. Let's look at the potential. So I want to sort of think about, well, what other things can make up for this big drop in search? So what if search revenue drops by 50% over the next few years? Could it? Maybe. It's possible. That is a massive part of their operation. That probably makes the stock worth about 60% less by my calculations, but worth maybe about 60% less. Obviously, that's a complete crapshoot. I'm saying 60%. Maybe it's more, because when things get kind of ugly in a storyline, in a narrative, things can overshoot in terms of the fair value, right? Just like they go on the way up. When things look really, really great and the story's fantastic, we shoot past fair fundamentals to the upside because everyone's excited. And then when things can go the other way, well, we can shoot past fair value to the downside because things are just ugly and a lot of people have to get out. So we're looking at things, well, what's going to make up for this? And I've really kind of put in this idea of what if we get the maximum potential growth out of these other things. So YouTube ads, going to be fantastic. I think they're going to do even better over time. Google Cloud, we could see that at least double fast growth, but it's a low margin, right? Margin. AI services, who knows? This is kind of the big wild card. Massive upside, but we really don't know what this is gonna do for them. And also, there's a big capex involved in this, right? So this is still at the stage where they're spending a lot, investing a lot in order to get to some stage where they can monetize all of that. to the fullest extent. Of course, Google is one of the monetizers. They're monetizing AI and data. They have been for 15 years. But let's see if they continue to do that and keep up with the Joneses in the AI space. Subscriptions, platforms, and devices, sure, that can go up a little bit. So Play Store, YouTube Premium, maybe they get people to pay up for YouTube Premium. I think there's a good chance of that. So I think this is a very fair assessment in that area. Hardware, low margin, not a driver, really nothing to see there, basically. So this is the problem, right? Google search share of revenue, big margins, 58% of revenue in Google search. YouTube ads, we'll probably see that go up a little bit over time. Cloud, network subscriptions that we talked about, and those other bets that are really not a big deal, that are really not generating anything. I mean, at some point we're going to see something come out of the blue, hopefully, and do well for Google. But at the moment, not happening. So again, to summarize, if Google revenue search, and we're just throwing a number out there, right? If it drops by 50%, that's going to kind of cut $80 to $90 billion in annual revenue. Lot of revenue, high margin business, and that's kind of assuming flat growth in that segment. So of course we have to make some assumptions. We can assume that Google search is getting smoked, like I mentioned. YouTube, let's say we're up 80%, up to 81 billion. Google Cloud, 100%. I think that's pretty fair. You know, that is kind of where you need to be right now. I just think AI just continues to go. Hardware, maybe they do a little bit better, but not much margin there. So you kind of come up with these fair value estimates of, you know, maybe if operating margin kind of normalizes around 25%. At 20 times earnings, I think you're looking at kind of a fair market cap of maybe around 1.7 trillion in a few years. So we're not that far from there right now. The problem is we are going into a big lull from this potential unfolding, right? So what if this becomes sort of headline after headline, earnings report after earnings report, where they just say, listen, we're under threat, right? This is what we talked about, not me necessarily, but everyone was talking about not that long ago, that what if we see this kind of big market share in search just even come down by 1%, by 2%, by 3%? It's not so much the percent, it's the direction of a business that had an almost absolute lock on search, not complete, but a massive hold on search. And if we start to see that erode, that is bad news. Markets don't like developing bad news that has the potential. Once it starts, it's going to keep going. The first moment you see Google say, yeah, our search is getting chiseled, that's not going to be the last time they say that. How are they going to turn that around? It is going to continue to get worse. And you know, is it doomsday? I don't think so. But is it an area where I'm playing some downside? Absolutely. So I picked up some puts. I picked up some leap puts. I picked up some downside spreads over the last couple of weeks, including some more today, where the stock was a little bit higher. So I'll keep you posted on how that develops. Keep in mind that I'm long lots of stuff, right? So this is a bearish play on a mag that I don't like, that has an eroding story. I have lots of things, if the market zooms to the upside, that are going to make up for this. But, you know, as I'm trying to run a little bit of a long, mostly long, but a little bit of short, a little bit of neutral to short kind of strategies, I want to sort of see how this plays out. I think there's a little bit of money to be made here to the downside as this unfolds. What's the target? I think $100 is a fair target for me to maybe start to incorporate some of the threats that they have. But again, I think if it's going to be a dark cloud over Google for a long time, it is just not going to be the one that people push into. It will be a value trap, right? There are cheap value stocks out there that just never go anywhere. And it's not because they're expensive. They are cheap, but they're value traps. They don't have what it takes to get going. And trying to pick away at value traps can be very difficult. It can be very profitable if you get the right one, you pick the right timing on it. So that's it for Google. I hope you guys enjoy that. Put your comments in the chat. I'd love to know what you think. I am absolutely open to rebuttals and a differing of opinion. I'd love to hear them, because that always helps to get me thinking about where I could be wrong. if I haven't thought of anything. So thanks for watching, and please like and subscribe. We're doing all kinds of great option content. I've got a mentorship that's starting soon, a pro mentorship from a pro who's done this for 30 years and managed $1 billion. So lots of great stuff happening on the channel. Subscribe, like, and make sure you check out every video. See you soon.